Hey traders, welcome to Master the Market, where we help you become a market master. In today's video, I want to talk about one of the most consistent scalp trading strategies that I've ever used in my nearly 10 years now of day trading. If there was one strategy that I was going to focus on in order to profit $100 per day from the stock market, it would be this strategy. So I highly recommend you watch this video all the way through. We're going to go over how this strategy works, and we're going to go over a few examples. Now, very quickly, I want to say that we're just going to quickly talk about this strategy here in this video, but in the next couple of weeks, on February 26th of 2025, Master the Market is going to be releasing the Day Trade Bootcamp, which is going to be a 6-month day trading bootcamp that is designed to help new traders and failing traders go through the process, put in the work to actually become self-sufficient, consistent, profitable traders. This is going to be done through different educational aspects. We're also going to be teaching you 3 proven day trading strategies. One of them is going to be the strategy that we talk about in this video. There's going to be real trading practice techniques, downloadable spreadsheets and resources, community support, and so on and so forth. And there's also going to be a bonus 1 free month to the Market Master group. And in the Market Master group, we're going to start announcing these signals for the strategy that we talk about in this video. So that way you can actually get these signals and these alerts to follow along with my trades using this strategy in real time. There is nothing like the Day Trade Bootcamp on the market, so stay tuned for more information on that and be ready for February 26th. Without further ado, let's go ahead and start talking about this strategy. So the idea behind this strategy is that we are going to be looking for relative strength or relative weakness when compared to our baseline or our benchmark, which is going to be SPY. So the RSW strategy looks for relative strength or relative weakness against something like SPY, because SPY is kind of going to be what the general market is going to represent. SPY is the ETF for the S&P 500. So any stock that is heavily weighted in the S&P 500, for example, stocks like Meta, stocks like Nvidia, stocks like Tesla, Apple, Amazon, Google, and so on and so forth. All of these stocks have a very heavy weighting in SPY. So if SPY is kind of trading sideways and chopping around, much like it did on Friday in this example, then all of those stocks in theory should kind of be doing the same. That means if one of these stocks is trending higher, it's forming higher highs and higher lows, and it's showing relative strength, you can actually have a little bit of an edge by buying into that stock with relative strength, as opposed to any of the other stocks that might be trading very hand in hand with SPY. The same thing is true with relative weakness. If one of these stocks is kind of breaking down as SPY is trading sideways, or if SPY was trading higher, that would be of course a sign of relative weakness for that stock, and you would have a short bias, which is going to give you an edge. So by comparing these 2 charts here, SPY with Meta on Friday, we can see that pretty much right at the market open, SPY began to chop around a bit, formed a little bit of a lower high right here, and formed a couple lower lows as well, briefly breaking down underneath this opening low. At the same time, Meta had a strong push at the market open and then formed several higher lows here, showing that there was some relative strength. That relative strength would be a great signal to buy a position in Meta, because it's very clear that the demand in Meta is stronger than compared to SPY, the general market or our baseline. And as we can see from there, we get a really strong move up here in Meta, which would have been a very nice profitable trade by going long into that relative strength. Now, the nice thing about this strategy as well is that if you're someone that prefers to trade lower price stocks, which I'm sure a lot of my following here on YouTube does, you're still able to take advantage of this strategy and take advantage of this video, because you might not have to actually trade Meta stock itself. You can apply this same strategy to trading the underlying options for Meta. And as I'm sure you know, if you're familiar with options trading, you can trade those option contracts for a fraction of the cost that it would be to actually trade Meta stock itself. So for example, if you saw this relative strength forming here in Meta when compared to SPY, you would buy a call option and you would be able to profit from this bullish move that follows in Meta. That call option would then increase in value as the price of Meta went higher, and that would allow you to take advantage of this relative strength without having to spend $736 for just 1 share of Meta. Now, I want to jump over very quickly here to my charts tab in my Thinkorswim platform. This is actually where I do a majority of my trading with this strategy. This is a strategy that I've really put a lot of focus on in the past couple of years, and I'm going to be shifting my focus to this strategy even more here on this YouTube channel in the future. So I want to show you guys how I actually take advantage of it. And what I do is I have all kinds of different charts pulled up here on the same screen. We have the SPY chart, we have QQQ, which I personally use as kind of just a second baseline or a second benchmark since it represents the NASDAQ. And then I'm going to have 4 other charts pulled up. All of these might be different at any given point in the day. Right now I have Eli Lilly, I have Meta, I have Nvidia, and I have Tesla, but I'll just scroll through my watch list and kind of look for any kind of setup that's showing me a stock with relative strength or with relative weakness when compared to the general market. So a really great example here is with Lilly on Friday. We can see that right at about 11 o'clock in the morning, QQQ is all the way up to a new high of day, where SPY is just slightly below its opening push, but it is still up near that high of day. At the same time, we see that Lilly is significantly under those morning lows. It's forming a significantly lower high, and it's actually starting to reject the VWAP as well. All of those would be great signs that this stock has relative weakness when compared to the market, and this would be a great opportunity to start scaling into a short position to capitalize on a bearish move. And from there, Eli Lilly fell from about $870 all the way down to a low later in the day of $841. So there was potential to easily profit over $20 per share just from this one simple relative weakness trade. And the idea behind this strategy is that there are all kinds of different setups on any given day, whether it be relative strength or relative weakness. So you don't need any fancy scanners, you don't need any kind of custom software. You're simply scrolling through different charts, looking at different setups, and you're easily able to identify if there is relative strength or relative weakness in order to take advantage of this strategy. If you wanted to kind of take things a step further, you could actually look into the different sectors themselves. So for example, we have all of the different sectors up here in a different watch list. We have communication sector, we have energy, we have financials, we have technology, and so on and so forth, healthcare. To kind of give yourself even better odds of having a profitable trade, you would maybe want to look for a strong trending stock in a sector that is outperforming the market or showing strength on that day. And on the other side of the spectrum, if you were taking a short position because of relative weakness, it would benefit you even more if that stock with relative weakness was also in a weakly performing sector for the day. So of course, there's kind of a lot more that goes into this, just like any other strategy when it comes to scaling in and out of your trades, managing your risk, identifying kind of the correct position size to have, and so on and so forth. But that is the general idea behind this strategy. And just by understanding this relative strength and relative weakness, using this RSW strategy, you're able to start building an edge and creating odds in your favor with your trading. So that being said, I know this was kind of a quick, easy video, but I hope you found some value in it. And if you decide to try out this strategy, make sure to leave a comment down below on your thoughts and how it worked out for you. And of course, if you want to learn the ins and outs of this, as well as all kinds of different price action analysis and different education, different training and different resources, all of that is going to be within the Day Trade Bootcamp. That is going to be coming on February 26th. And I can say with confidence, this is something that is going to be a game changer for a lot of you that are struggling with your trading. So stay tuned for that. Thanks for watching this video and good luck with your trading.